Welcome back. You're watching the Global Dialogue, and we're in conversation with the global CEO of Novartis, Vas Narasimhan. You're now looking at 5% growth through to 2027. You've seen a significant improvement as far as your margins are concerned, and you hope that that will continue 40% plus. To sacrifice what you believe is no longer relevant for you, or what you believe you're no longer good at or potentially good at, that takes courage. It takes a lot of conviction. What's that journey been like for you?
It's been a journey, I have to say. You know, as a physician scientist, I of course wanted initially to pursue many areas of medicine. And you know, when I took over the role as CEO, we were in 11 different therapeutic areas. We had a vast pipeline. We actually had the largest R&D pipeline in the industry. But what we saw over time is this was not a recipe for consistent success. So over the course of our recent transformation, we made the hard decision to focus on really 4 therapeutic areas. We cut our R&D pipeline by 25 to 30%. Very difficult choices. As a scientist, not choices you necessarily, physician scientist, that you enjoy making. But what's been fascinating to see is how our growth has actually picked up when we focused our therapeutic areas in the markets. Last year, we delivered 10% growth. For a company of our size, that's significant. When you think about our margins, they started to go up. Our R&D performance picked up. And so I've really learned through the experience the power of focus. In the end, you have to, even when it's hard, focus on what you're good at. Make the hard choices to say no to many things so you can say yes to the things that really matter. And that leads to outperformance. You know,
given the fact that you have now completed the transformation and today you stand as a pure-play innovative medicines company, going back to strategic choices, I want to go back to that essay that you wrote where you said that we're still just about doing 10% of the 7,000 or 8,000 diseases that we should be addressing. Are there spaces that you today look at that you believe that you are poised to be able to address or take on?
I think there is going to be this renaissance in a number of areas as we get these new technologies. So I think one, but it will take time, is I do believe we'll start to be able to address neurodegenerative diseases and the whole world of neurology. This has been an area that's been very challenging, understanding the mysteries of the brain, how medicines work. But now we have technologies that can traffic very specific molecules into the brain, things called siRNAs or small interfering RNAs, gene therapies. And I do believe over time that will allow us to address a whole range of diseases, hopefully things like Huntington's disease or Alzheimer's or Parkinson's, but also very specific genetic diseases. So I think this will be a whole area that could really emerge over time. Another area I'm really excited about is an area called siRNAs for cardiovascular disease. One of the great challenges in India, but also around the world, is cardiovascular disease remains, even with obesity drugs, remains the leading cause of death and disability on the planet. And one of the reasons for that is people just don't take their medicines. Now, if you have medicines that are only given 6 months, every 6 months, or once a year for hypertension, for high cholesterol, for other risk factors, you could transform cardiovascular medicine. These are now starting to become available. We acquired a company, we have our own pipeline. So these are the kinds of things I think that could really open up, let's say, in the next decade.
You know, you talked about deals that you've done, and 2023 has been a big year in terms of strategic deals as well. Is that going to be something that you continue to focus on? And are there any specific areas of interest where you intend to go after capabilities, companies?
When you look at last year, we actually did 15 deals, which is actually a high for us over the recent years. And I think it's a consequence of focusing it as a medicines company, focusing in specific therapeutic areas, but also no longer owning Alcon, Sandoz, our generics business, our consumer health business. We can focus our capital now on innovative medicines, which means our energy, our minds are very much focused on finding these new opportunities. So I do expect it to continue. I'd say where we find the biggest opportunities are actually in the very early space where there's smaller biotech companies, private and public, where I think of it as we can take a portfolio of bets, and we just need a few of them to work. If you think about our radioligand therapy, which I mentioned earlier, that was a bet and it worked. And that pays out, then the whole portfolio looks really, really good. It gets harder when you do larger deals, because as you do larger deals, to get the synergies to really pay back the premium is much, much harder. So what we've stated is we primarily focus sub-$5 billion deals, mostly sub-$2 billion deals. And I would see our steady pace of deal making in our 4 therapeutic areas: neuroscience, cardiorenal, immunology, and oncology, that's where we want to focus.
I want to address the issue of innovation and access, and especially for a market like India, that's what it boils down to. How much convergence do you believe we have seen on being able to make innovation accessible? And with the use of technology, etc., what's the hope? What's the bull case on convergence?
I think we have to win that battle over time, and it's not an easy battle, but I do see early signs that we get better and better at this. When you look at our innovative portfolio, we have medicines like our heart failure drug Entresto, where we've reached millions of Indians, which we would never have even dreamed of a few years back. So we start to get better and better at cracking access. But I think it's up to companies like us to come up with innovative models, whether it's innovative access models, innovative insurance models. Clearly, as you have emerging markets like India go through this transition, it is a budgetary challenge, and I think we have to come up with better solutions around that. I think Novartis is a company that can do it. We believe we reach over 280 million patients with our innovative medicines around the globe, the most we think of any pharmaceutical company. So it's something we really, really take seriously. I think technology can play a role in trying to get there. I think when we get to new generations of technologies, I mentioned this siRNA idea, that's actually not an expensive drug to make. And so can you get to twice a year cholesterol lowering drugs in India that are low cost and then open up a whole new space? I think that's what we're going to have to come to, is very innovative approaches if we want to reach large populations like the ones in India.
So, what's the innovative launch pipeline potentially for India over the next few years? And do you do that with partners? Do you do that yourself? What's the view on that?
We have a steady flow of launches coming up. As I said, globally, we have about 12 launches coming out of these 10 positive phase 3 studies. And many of those launches will happen in India, most of them through our own field force. But we also do look at partnerships as well to try to reach a broader segment of the population. I think the biggest question is the reimbursement environment, and can we get enough financial support to launch this next wave of medicines? But I think we have an obligation to figure it out. I mean, we know that these diseases impact large populations in India. I would also say Indian investigators and Indian clinical trialists have supported us to get these medicines forward. For instance, we have a medicine called pelacarsen, which targets a specific factor called Lp(a). Sorry to get a bit technical, but it's like LDL cholesterol. And what we know is Lp(a) is likely one of the reasons Indians often have heart attacks at younger ages. So we all know younger Indians who have had heart attacks in their 40s or 50s. Yeah. The belief is this is because of Lp(a). So I believe we have to find a way to launch that medicine in India. And now we haven't got the solution yet, but that's something we have to figure out.
But what would it take for you to be able to do that? I mean, what are the options that you're looking at in order for you to be able to launch them here?
I think we'll launch it. I think to have broad uptake, we need payer support. And I think we need to find a way with the government or with insurance companies to really find ways for Indians to be able to reimburse or afford these medicines. Because these are newer technologies. These are not small molecules. The medicines that I think often are available. And so the cost of goods are higher, therefore the prices are higher. And so we need to somehow find a solution space there. But I think we have to figure it out, because I think there's so many people who need these medicines in India.
Back to what's happening globally, in terms of capital allocation, and specifically as far as the R&D side is concerned, I mean, you've spent a significant amount of money on R&D, which is why you've been able to build out this pipeline that you just spoke of. What can we expect on that front? I mean, you've of course got your dividend plan and you've got your buyback plan in place as well. But just from an R&D perspective, what do you believe the capital needs will be as you chase after some of these potential blockbusters?
Look, it's a great question. We've been very consistent in saying our margin expansion, and we've had nearly on a constant currency basis, almost 10% margin expansion since 2018, and 16 billion plus of core operating profit. We do not achieve our margin goals by cutting R&D, and we keep investing in R&D. Now, I think that the interesting thing is many of these newer technology platforms do cost more, and we plan to continue to invest appropriately. We think we can fit it in our current margin basket. So we've committed to the 40% plus you've mentioned. That will mean we continue to invest about 20% of sales in R&D. That doesn't change, and we'll make the appropriate trade-offs. But what I would never want to do is compromise in R&D in our sector. As a pure play innovative medicines company, our lifeblood is R&D.
I was just looking at some of these screens up here, and it's very clear the focus on parity and the focus on bringing more women into Novartis, and specifically Novartis India. Take me through what the plan is on that.
Yeah, we're very proud about this. We made a commitment to reach the EPIC Pledge goals, and we reached them. And so that includes that at Novartis, equal pay for equal work. We've achieved that goal. When you look at equivalent pay for men and women, actually median pay in Novartis is higher for women than it is for men. 48% women in management at our company globally. And in India, we also continue to make progress. I believe we're now in the high 30s% women in the organization broadly, and also getting to that rate in management, which I understand is better than what we see from many of our peer companies. So I think this is a great place to work for women. I think women do well in our company in India and do well in the company globally. And we're very proud about that. And I think when you look at my leadership team, we're also now working hard to make a more and more diverse leadership team as well.
And I want to touch upon something that we did speak about the last time you were here as well. You're passionate about malaria and being able to address issues and challenges like that. Yeah. How are you seeing, especially in a post-COVID world, do you believe that the lessons have been learned from a public health policy perspective, both from a private sector point of view as well as a government perspective?
I think for pandemic preparedness, no. I don't think the lessons have been learned. I think we repeat, unfortunately, the same challenges. I mean, fundamentally, pandemic preparedness is an area I would characterize as a market failure. The market only gets created when the pandemic happens. In between pandemics, there is no market. Therefore, the private sector struggles to invest. But the political realities is governments struggle to justify investing in pandemic preparedness in between pandemics. So what you have is so much activity happened in 21, 22, and then it all got put on hold because government investment stopped, including in our own research labs. And now what will happen is a pandemic will happen again, and we'll have to start again from ground zero and try to get back up to 100 miles per hour. So I don't think yet we've learned the lessons, and it's really a question of how do you get consistent investment in a space where there's low likelihoods of something happening. On the flip side to your question on malaria, there I think we make great progress. We just announced that we have positive results of our coartem medicine now available for young infants. We have, I think, now 2 or 3 medicines in development in late stages to treat resistant forms of malaria. And I think we steadily get to a malaria-free world, and I think that would be an incredible accomplishment.
Well, 2023 has also been the headline year for Ozempic, and that's sort of taken everyone and captured mind space and headlines. What do you make of that, and is that a potential area of opportunity at all?
I think these drugs do an incredible job for people who are, I think, really overweight and need to reduce weight to reduce their risk. And I think the cardiovascular risk is also reduced. A few things to note is that risk is independent of the other risk factors. So you still need to manage your blood pressure, your lipids and cholesterol, these other factors I mentioned earlier, Lp(a), et cetera. Nonetheless, it's a clear medical breakthrough. I think clearly the question will be how, over time, patients will stay on these medicines, how will they tolerate them, because you have to stay on the medicines to continue the weight loss. Our approach is to look at the next generation, hopefully, of technologies in the obesity space. Can you get medicines that don't cause nausea, medicines that allow you to maintain your muscle mass, because these medicines do cause you to lose your muscle mass? Can you get medicines that are not injected every week or every month or taken infrequently? So that would be probably a decade and beyond. But that's certainly what we're thinking about, is much more the next generation of obesity treatments.
But you don't intend to speed that up?
We will, of course, try to speed it up. But one thing we're trying to stay very disciplined, one of the other learnings I have, is the fear of missing out is not a good reason to make strategic decisions. You have to have conviction about where you are, what you're really good at. We have a business that grew 10% and 18% profit last year. We're doing very well. Now, we shouldn't get distracted by the fact that others have success, but rather really focus on the areas of our own success.
It is an incredible story, Vas. It's always a pleasure. Many thanks for joining us here on CNBC-TV18. We wish you the very best of luck, and we look forward to seeing you back here again.
Thank you, Shareen. Wonderful to be with you.
Well, with that, it is time for us to wrap up this edition of the Global Dialogue. From all of us here on the team, for now, goodbye, and many thanks for watching.